Hey guys, what's going on? It's Matt Weeder here, sitting with my good colleague Adam Bruner from Flagship Home Loans.
How's it
Adam,
going,
how are you
everybody?
today?
Good. How you doing, Matt?
I'm doing well. I'm doing well. So we wanted to go through today and give the top four areas that our buyers are getting into houses, what he's doing in his market, in his area, what I'm doing in my market. So here's the top four areas. By all means, we can dive into these more, but let's hit them at 10,000 feet. Let's keep it short and sweet. What you need to know and what we're doing to help our clients as mortgage providers get into houses. So Adam, number one, appraisal waivers. I'll let you take it from there. Tell us about what those are all about.
Sure thing, Matt. So number one, appraisal waiver is a finding that's in the AUS system or the automated underwriter system that for conventional loans where buyers are putting more than 20% down,
Mhm.
there is a chance that a buyer can get that loan without an appraisal. Okay. Now, it might be something that you have not heard from other lenders. And that's because most other lenders, and when I say most, I mean like 99% of other lenders only look for that after the loan is already in underwriting. The key is we look for those up front, and if we find them, we can put that on our offers, and that strengthens the offer to the sellers. It takes out the entire appraisal process. We know
Yep.
what the value of the house is. We know that there's not going to be any issues with the condition because no one's going into the house to look. It also takes that step out of the process, which means we can close much
Huge.
faster, which Matt will hit on in a couple minutes. So again, it's for conventional mortgages only.
Hmm.
Typically, it is for single family owner occupied properties, and they have to put 20% down. And if we have those criteria, we run it through the system and it tells us whether or not we have a waiver. And probably 30 to 35% of the time, we get it. And when we get those, we're most likely going to win that offer if we're making a competitive price on our offer.
Absolutely. And Adam, you said before, I think we as mortgage brokers are really the only ones that can run it ahead of time, which is great.
Correct. Correct. Because nobody else is putting an address in the property until they're actually under contract. So that's why
Yep.
you haven't heard it. That's why we're the only ones out there that can actually offer it.
Absolutely. That was a great number one point. You hit nail on the head with all of those. That's awesome.
Absolutely. And then Matt, you're going to talk about appraisal gap coverage. I love this one. Tell us
Oh yeah,
about
one of
that.
my favorites. So yeah, so appraisal gap coverage. So let's jump into what that means. So appraisal gap coverage is pretty much gapping, a bridging a gap. If an appraisal comes in low, if we don't get that waiver Adam talked about, say we have to do one, and the we're guaranteeing Mr. Seller that if the appraisal comes in low, up to a certain amount, say $10,000 low, we as Mr. Buyer will go ahead and bridge that gap. We will guarantee up to a certain amount that will go in and guarantee that money. So that's being first and foremost asking people kind of what's your all in number to buy the property. If you have, say, $50,000, we could structure the loan program that maybe you only need $40,000. And, if there's multiple offers, we can tell Mr. Seller, instead of maybe a 20% down or a 10% down, we as buyers will do more like 5% down or a lesser amount and use the rest over money to guarantee the gap coverage is in place. So it's a way to utilize the funds to guarantee the seller they're going to get a certain amount in their back pocket. And that's what it's all about in this market. 100%, as Adam sees in his as well, guaranteed money to the seller. Number one thing we need to do. So it's a way to structure, usually a
Yep.
little less down. The monthly payment might be $30, $40 more a month. Absolutely. But you're going to secure that property and that house is going to appreciate a lot more than $30, $40 a month. Even if you have to enact that gap coverage. So, all guaranteed money to the seller is most important, which is going to lead me into number three, which Adam's going to go through, is guaranteed money in terms of writing the agreement for agent commissions and like transfer taxes. So, Adam, why don't you touch up base on that one for us?
Absolutely. And before we move on, just one more thought about the appraisal gap coverage. The real gravy is when we have someone putting more than minimum down and we can keep the buyer's total cash at closing the same, even though they're covering some gap coverage.
Yes,
Again, that's only for borrowers or buyers that are putting more than minimum down. But that's really what we the sweet spot that we look for when doing appraisal gap
absolutely.
coverage.
Great,
Um,
great point.
Moving on to the transfer taxes and agent commission. Again, it's something where if we have additional funds and we want to put that on the contract, that's great. It is some more money out of pocket. But the other way to look at that is we are sweetening the deal for the sellers without increasing our price. So if we have a situation where maybe we can't go any higher because maybe the house won't appraise for as much, we can put some more money into the offer to sweeten the deal for the sellers by offering to pay for their transfer tax or our agent's commission, our buyer's agent's commission. And again, if we're covering $10,000 of those costs and keeping the purchase price the same, the net proceeds that the sellers are going to receive are increased by $10,000, even though we didn't increase the price. That's the real sweet spot there. Again, that could be commingled with the appraisal waiver, right? Because we can't always increase that appraisal waiver to increase our offer price, but we can cover those other costs and keep the price the same and still honor the appraisal waiver. So those are the creative combinations, and you can see how 2 or 3 or even 4 of these things can come together to sweeten our deal on some of our offers.
Huge. No, absolutely. That's, I was just going to say, lots of these have combinations of multiple different facets of these different points that we're going over, which only strengthens the offer, which is great.
Absolutely. And it all leads to a smoother process, which we can be flexible on the timeline of closing. And Matt, you're going to talk about that.
Oh, yeah. Number 4, as we wrap up here, is being flexible with your close times. Adam, glad you brought that up, because being flexible either in speed or if you need time for that seller are going to be what, kind of give them what they want. So yes, you might have to adjust your time frame to kind of compensate for the seller, but maybe they want to close in 15, 20 days. Okay, we got to get up on our horse and go and get that done, which we have no problem with. Maybe sellers are building a house in another state and they need to close in 6 months. You need to be flexible in that. Luckily, we can process loans very quickly and get those tight timeframes done. We also have extended rate locks where if you're concerned with that, we could always extend a rate lock out to almost a year if you really wanted to do that. So being flexible as number 4 and as our final point, it's going to give you some leverage in other offers that might not be flexible at all. Or to Adam's point earlier, in combination with everything else, you really got to look at these 4 things. So we hit you with a lot at one time. It was a lot going through, but by all means, Adam's info, my info are going to be at the end of this video. Always reach out to us. We can dive into any of these topics, but we figured take a couple minutes here. And this is what's winning bids. And, if you have a loan officer's not proposing these to you, you're kind of missing out a little bit. So definitely love to help you guys out. Give us a call and see what we can do for you. And Adam, thank you so much for taking some time out of your day. Really appreciate it.
Absolutely. Thank you, Matt. This was fun.
All right. Absolutely. We'll get you guys in the next time. Talk to you guys soon.
Take care, everybody.